Today I'm going to talk about my dividend goals in a growth-focused portfolio. Today is going to be a little bit shorter, but I still want to highlight that there is a level of importance to holding dividend stocks inside of a portfolio. Now you might be going, well, if I'm a growth-focused portfolio, surely it's controversial or contradicting yourself to be investing in some dividend stocks. Like surely you'd be wanting to invest in the companies that reinvest the earnings back into themselves and therefore can generate better returns with that money. Well, yes, that would be right. If I went for a primarily growth-focused portfolio in which I invested in only companies that reinvested their cash flow and generated great returns on capital employed, then I'd likely see a greater return over the longer term, in my opinion, if the strategy is done well and the tactics are well played out, then it will likely do better because it will have a greater rate of compounding over time with obviously the fundamentals improving, or as you would hope. Now, see, here's where I would add dividends in as well. Yes, there are some companies that can grow at a fast pace and pay out a dividend. However, there are also some companies that would not benefit whatsoever from paying a dividend. For instance, my largest holding with Boohoo, I absolutely would not want them to pay a dividend. That is not in my interest. I believe they do better investing in the longer term, investing in their facilities and how they're able to drive greater levels of sales and subsequently profits. I would love to see my value returned in the fundamentals of the shares rather than being paid a dividend, especially as the company is struggling. Now, it doesn't necessarily mean I'm looking for high yields, but I certainly think a dividend is important. Now, the most obvious reason why a dividend would be important, especially in my portfolio, is the idea that if there's an extended downturn in the markets, like a bear market, for instance, and you're seeing your stocks maybe stagnate or not go up too much, or we're seeing a period of great volatility in which one month your stocks might be down 10 or 15%, and the other month it might be up. At least then if you've got some dividend cash flow coming in, providing whether or not you've got annual income, right? At least if you've got some dividend cash flow coming in, you're able to go, okay, you know what? I'm going to reinvest that money as best I can and let it grow. Furthermore, it's a great feeling when you get a dividend. It really feels that you've made some money, and I mean, you kind of have. Whereas with a growth stock, you kind of have to wait until you crystallize that loss or gain before you really have any impact. And I think in some way you should have a level of enjoyment from receiving dividends, as it's a great positive factor in which you're able to keep doing it. You get that reward pathway, I believe, the dopamine release in your brain or in your head even when you receive a dividend payment. So obviously if you're able to get bigger ones, then that would be great as well. So now when we actually jump into what I'd be interested in earning in my portfolio, it's important to note that I only have 83 shares of Games Workshop. Now if I jump on this app here that I have on my phone, and basically what it's going to tell me on this app is how much dividends that I can earn going forward. So since I only hold Games Workshop in my investment ISA, I would therefore need to check this and see how it does. Now, if you excuse me, I'm very slow at this, but here we are. So suggested on here on this app, and I will put a link to this app in the description down below, right? But it says my annual dividend income here is £232.40. Now that's not bad at all in a growth portfolio. And it breaks it down further here. It says on a monthly basis, my income is £19.37. And when you really want to start looking at financial independence and being able to use your investments to cover your bills, it works quite well because obviously in the situation that you are retired, you don't necessarily need to sell off some of your holdings each year if you have got a dividend income available. However, I personally am more of a believer of having a higher risk, more growth orientated strategy as you are young and have a longer investment time horizon, and then sort of scaling back over time and building into more consistent dividend stocks that aren't going anywhere anytime soon, which is beautiful because that's exactly what you need at an older age where you are in retirement and very dependent on an income. Hence the more defensive, higher yield stocks come into play that may not have as much dividend growth. That said, £19.37 of a monthly dividend income is quite nice because you look at it and go, okay, what can I afford with this money? Well, I'm getting £19.37. That's actually double the price of my phone contract. So my phone bill is paid 2 times over. You may look at other things and you might go, well, actually, I don't do that much in terms of driving a motorcycle, and it's actually covering the entire cost of my fuel because I have a very small motorcycle, and it does 100 miles to the gallon, for instance, and you've got a month's worth of fuel cost right there. Or it might cover 1 or 2 odd bills, and that's a great thing because then you've got that there and you don't have to worry about one thing. Obviously, dividends are not guaranteed, but it is a nice feeling. And when broken down to a daily factor, it's 64 pence a day. Now, obviously, that is not much at all. You could find a 50 pence on the ground, but if you did that every day, you'd have to be pretty lucky to achieve that. So it's very important here in building dividends over time. That said, how would my strategy really change with this? Well, at the moment, obviously, I'm primarily growth focused, but I am going to be looking to be adding a higher yield dividend stock. Now, I've got Games Workshop in the portfolio, and roughly at the moment, they're yielding about 3 to 4%. But alongside my goals that I've mentioned before in purely financial goals, I would like to expand upon the amount of income that I would receive as well. So, as I say, I've got Games Workshop here with a 2 to 3% yield because of my cost average is closer to the high 2% area than the current 3.5% or whatever the current share price offers. I would like to have another dividend stock in here that maybe has even less levels of growth but a higher dividend yield, somewhere in the 4 to 5%. And a quarterly payout would be nice. A greater frequency means that you're able to reinvest that cash flow in smaller intervals, and that ideally would mean that you've got a longer time invested with obviously all of those intervals and the period of time you have after that, dependent on your strategy, obviously. And with that in mind, as I say, my goals for dividend income would be obviously reaching £100 a month in dividend income. At the moment, as it suggests, I'm a fifth of the way there. Now, if we look at my current portfolio value, let's assume that I bought everything in the same ratio as it is right now, then realistically, I would have to invest another 70 odd £1,000 in order to achieve £100 a month in dividend income. Now, don't get me wrong, some people have portfolios with much higher average yields. My largest holding is a growth stock, and I hold about 65% of my portfolio in that growth stock that doesn't pay a dividend. So it's going to greatly impact the amount of dividends I receive. But at the same time, that's a good thing because it also means that I haven't got used to a high level of dividend cash flow, and it means I'm able to keep flexible in my strategy in a way and not become bored or unexcited by some of the smaller dividend payments as they grow over time. It gives that more of an opportunity to grow, as I mentioned, which is exactly what I'm looking for. So £100 a month really in cash flow, and realistically I'd love to be able to reach this goal by probably 2024, the end of. So let's just say 2025. Now, when we put this into contrast with some of my other goals, I did want a 6-figure net worth by the end of 2023. I don't know how realistic that is these days. A lot of it is dependent on luck. But again, I'm going to push as hard as I can. Keep pushing that wheelbarrow because it's not going to do it itself. Keep doing the work. Turn up every day. Be consistent. And hopefully the results will eventually deliver. That's ideally the plan. And then going forward a bit more longer term, obviously everyone wants to hit that £1,000 a month in dividend income, although again you would have to 10 times the value of that portfolio. So realistically I think that's going to take a good nearly a decade at this point. So I'm not really too focused on that goal because again it's more of a dream, less of a goal because of how far out it potentially goes. And I also don't want to distract too much from my strategy because I do think that I have got a good strategy down here, even if at the moment I am down about 50%. Thank you for watching. Have a fantastic day.